Hey, last question about that. So with a reno loan, how does the loan amount versus the value of the home work? And then actually, I want to just ask you how pricing compares to kind of non-reno products. But first, like LTV, CLTV, how does that piece
So
work?
essentially, renovation loans for us here at Loan Depot, they do not have their own set of credit guidelines, right? So, for example, if you take FHA, right, it's no harder to be approved for a 203K than it is a 203B, right? Normal FHA transaction. So long as you can afford that slight increase in mortgage payment because you're rolling in the renovations. So the credit guidelines are exactly the same across all three main renovation products. Now, as far as the loan amount and how you calculate that, think of it like this. You're going to take the purchase price and you're going to add the total rehab to it. So if you have somebody buying a property for 500,000 and they're going to build $100,000 ADU, maybe 150. Okay. So now your total acquisition cost, adding the two together, say puts you at 650.
Yep.
That's the number. That is what your down payment is based on, what your PITI is based on, your debt ratios, everything is based on the total acquisition cost.
So and the value of the home is going to be determined by the assessment after the construction is done.
That's right. So when you order an appraisal, you're asking for the future value. We don't care what they're paying for it now. What we want to know is what is it going to be worth when they're done with the repairs, or in this case, adding the ADU.
I love it. Thanks for painting that picture. And then as far as pricing goes on K versus non-K loans, what tends to be, it's you're factoring in construction costs and stuff, so it's a price differently, but what's the best way to articulate that?
Yeah, I would tell you that renovation to non-renovation, renovation does carry a higher interest rate because of the risk involved. So you're going to see, you can't really, it depends on the overall profile, as always, just as it would with non-renovation. But you can expect to see maybe a quarter, 3/8 higher in rate, depending, right? But these loans, they have no prepayment penalty. There's no restrictions. You can pay them off, pay extra, refinance, sell them. And we're actually seeing a lot of people refinancing and selling because they want that equity gain, right? They fix up and add an ADU. All of a sudden, they're like, wow, I mean, this thing's worth more than I thought it was going to be. And they're selling into a strong market. So,
yep. And then during the construction process, we're managing the draws and the inspections and things like that to make sure that the work being done is worthy of the construction build and spend, right?
That's correct. Everything is handled in-house. We don't use the title company for anything. And whether you're doing a purchase or refinance, what the customer experiences through the closing or funding is exactly the same. There is no difference. There's no difference to what the realtor experiences. There's no difference to what the customer experiences. It's pretty streamlined.
I love it.